Hello traders, Gary Wagner here. Approximately 9:30 in Honolulu, 3:30 in New York. It is Wednesday, the 22nd day of August, 2012, and this is the daily report for gold and silver. Strongly higher prices on the back of the minutes being released from the FOMC meeting last month, in which we saw heavy carnage on the US dollar index. As the dollar index goes down, of course, we are seeing a tremendous rise in the precious metals. Currently trading up between $16 and $17 higher on the day. As you can see, current print is $16.5488, the low being $16.3340, and the high being $16.5680. So we're just off the highs right now. Silver, tremendous move in silver right now, up almost 2% on the day, currently trading about 50 plus cents higher. As you can see, current print is $29.82. That's correct, $29.82, with a low of $29.19 and a high just above 30 at 30.03 on the day. Traders, we have definitely an exciting day happening in the precious metals markets. Utter breakout in the market itself. Of course, we had the release of the FOMC meeting. What was significant is it did illustrate that there was discussions currently going on with the Federal Reserve Chairman as well as the presidents of the individual banks, in which they were talking about further monetary easing. That, of course, has really prompted the dollar lower. It's really moved the precious metals higher. We're looking at our daily chart. This daily chart, of course, has our Elliott wave count, but more importantly than that, it has a area. This is that 23% retracement level. This is, I believe, 1627. And we talked about the fact that what was important when we look at this market, let me go ahead and highlight it right in here. What was important was that it was my sense that if we were able to really make it above these tops right here, these highs that had been such strong resistance for over the last couple of months, that what we would probably witness would be a pretty strong breakout and a breakout to the upside. There's no doubt. We're seeing that right now. The question remains, and this is what I'm looking at currently: how will the market react once it runs into the next level of resistance, which I'm pegging anywhere between, call it 1661 and 1671. That is what we'll have to see. Because if you recall, I've outlined two possible scenarios in which I feel we might see this market move towards. Both of them are higher in the long term, but the question remains, will the market be able to sustain this kind of move, especially once it hits this upper band of resistance? That's right in here. We have the lower band, we have this compression triangle, and the question remains in my mind, are we going to get our full 5 count, meaning wave 1, 2, this is the third, we're obviously right at the fourth. Will we break here and then break right into our major fifth wave? Or will we have yet the last leg down, which is our leg 5 right here, and then our thrust up? Well, since I can't tell the future, what I can tell you is that we're positioned properly. We got in the market. For those of you who have been with me for a while, you know that typically I'm looking to really buy the bottoms of the markets, look at the pivot points, look at the reversals. In this case, I did not. And why is that? Because I had seen this market, as it consolidated, get hit against this really strong brick wall right in here on so many occasions that my sentiment was that as this market meandered up, I felt that if it comes back down, we'll buy the pullback as it gets back to the lower end of the range. And if it breaks above it, we'll go ahead and buy the breakout. It turned out that we did go in and buy the breakout. But for those of you who have been with me for a year or two, you know that typically we're positioned in a much better price point than we are now. But we're up substantially on the year. And when you take a look at the the cycle that this market has traded on from the beginning of the year to current, you realize that we have been in a market, we did catch this move up, but we've been in a protracted correction. This correction took a period of 3.5 months kind of to work itself out, but it absolutely appears at this point as though we are finally witnessing definitive signs that this long correction has concluded. Traders, very quickly, we are looking at a weekly chart, Henkin format, dollar index. I've put together a basic modified shift Andrews pitchfork. And as you can see, I've pegged it off of a high here and then the high and the low in this area. And it's quite easily really illustrated with this center bar, our current resistance area. As you can see, as this market pops up, you can see that it absolutely found resistance and appears as though it's going to trade back lower. Where to? Well, there's a couple of points. We'll talk about that throughout this week. Traders, I want to quickly recap and really step back for a little bit, take a look at the big picture, because with this big picture in mind, it's going to give us a much clearer indication of where this fifth wave could go once we have absolute confirmation that, in fact, the impulse phase has begun and the correction is absolutely a thing of the past, has concluded. On terms of our major count, I started right here. This is 2008. Call it November 2008. Our first major clip up. That's wave one. Our correction, 2, and this tremendously long wave 3. Take a look at this wave 3. Wave 3 really starts at about 1100, takes us to about 1900, and then we get this long corrective winter, we'll call it, this being 4. Now, if in fact we are beginning our impulse wave, this is where it gets nice. And the reason I say that is that wave 5 has typically been the largest of the impulse waves in gold. Not necessarily the smallest, but the largest. Now, 3 cannot be the smallest. That's one of the Elliott wave principles. However, it doesn't have to be the largest. But let's assume that waves 1 and 5 are about equal, because typically in Elliott wave forecasting, that's pretty much what you look for in terms of a straight model. But if we do that, here's what is very, very interesting. If I simply take a line, and these are all scalable, so that means that they will account for any moves. This is the amount of time and price movement we saw in wave number 1. Now, let's make the assumption here that wave 1 and wave 3 are equal. Let's also make the assumption that the low was right around 1520. By simply taking this line and carrying it up, it's going to give us a price point or a target for where the conclusion of wave 5 might take us to. And if you look at this, you're looking at something like 20.05, in other words, well over $2,000 per ounce in gold. Time parameter, well, if the time remains the same, this is 2013, we're looking at about the middle of 2013, July, for the conclusion of this last major fifth impulse wave. But the key is this: if wave 5 is simply the same size as wave 1 was in terms of the major count, we are looking at a phenomenal move in gold, taking it past the recent record high of 1920 and taking it above $2,000 per ounce. Traders, not to be outdone by gold, silver, gold's little brother, is certainly shining and shining bright today. As you can see, utter absolute technical breakout in the market. Once we got really past these tops right in here, as you can see, you've had really strong green Henkin candles all the way through. The real next level was that 28.81. It was based on these tops. It's a Fibonacci retracement. You can see right in here where there was superlative resistance except for this one point. Our next level is obviously right in this area, but it actually looks like it's right at that area, and we'll see how it reacts there. Should it be able to make it through this area? And I said, if you recall, we have pretty much clear sailing till about $30 per ounce. Here's what we're looking at currently, the 38% retracement level, which is 30.50. That's going to be our next target should we make it through this target. And then in terms of some real resistance, major resistance again at about $32 per ounce. And this is the continuous contract of COMEX silver. Terrific moves in the marketplace today. We positioned ourselves. We are long. The market is moving in the anticipated direction, and we're getting the breakout we were looking for. Great day in the market. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.